I'm Selena Wang, and for Emily Chang, this is the best of Bloomberg Technology, where we bring you all of our top interviews from this week in tech. Coming up, yet another big week for big tech earnings. Both Apple and Facebook reported. We'll go through all the main takeaways ahead. Plus, Big Blue's big deal. IBM looks to the cloud with the $33 billion acquisition of Red Hat. And plus, a hotly debated ballot issue here in San Francisco. Funding for homeless services has had tech and the city divided. We'll speak with one of the most outspoken advocates for a new ballot measure, Salesforce co-CEO Mark Benioff. This week, we had a slew of earnings out of big tech. That includes Apple out Thursday. The numbers provided the first real insights into the success of the company's new iPhones, especially the lower-priced XR model. But the real focus was on Apple's fiscal first quarter forecast covering the important holiday season, when the XR is expected to be a popular gift, luring owners of older iPhones to upgrade. We caught up with a Simco analyst, Horace Deju, and Forrester analyst Julie Ask right after the numbers were announced on Thursday.
We had a great third quarter, in terms of third calendar, fourth fiscal, but we're a little bit disappointed on the guidance here a little bit. It looks to be perhaps indicating emerging market or China slowdowns, and frankly, it's flat. Considering the product mix they have, it's a flat forecast with zero growth in the iPhone.
And Julie, a big change of focus is less on the number of iPhones sold, but the average selling price, which has continued to increase and beat analyst expectations. But how much further can they juice this price from these same consumers?
So far, there really haven't seemed to be that many limits. I mean, if we look at Apple's opportunities in terms of revenue growth, they can either find more customers, and most of the growth in the smartphone market is coming out of markets like Indonesia, Nigeria, and India, where there are, let's say, the percentage of the population that can afford one of their devices is in the high. You can increase revenue, or you can sell more products. And certainly, while the wearables and the other devices are doing well, there is no other it product like a smartphone that consumers really feel they have to have.
And Horace, now these results only show about 2 weeks of the newest iPhone sales, the XR, the XR Max, etc. What do we know about how those have performed so far?
Well, again, the signals are pretty good as far as what we're seeing from sampling on the retail side. But the problem is, we just don't know if there's going to be, again, some kind of structural issue in China. We also, as far as the pricing is concerned, yes, it's gone up, but there's still quite a bit of mix out there. The iPhone, the newest XR, has not yet really shown us a lot of data, and the XR is really the driver. Is going to be the driver for China and other emerging markets, I believe. And it's a little bit of a puzzle to me why we're not seeing the sort of enthusiasm from guidance.
Right, we're actually seeing most of the FANG stocks down right now. Apple was the last to report. The hope was that it might lift the tech sector. And what do you think now? We're seeing stocks down. Investors seem underwhelmed. Is this going to change perhaps later in the day?
Hard to say on the whole market. I'm sort of looking at Apple alone. We're seeing a little bit less enthusiasm, I think, from management. We just had 2 days ago new products, meat and potatoes products. These are just the middle of the market. The new Air is a little bit pricier, but it's certainly getting a nice boost in terms of functionality. And not to see that reflected in guidance is a little disappointing.
And now, actually, Tim Cook gave an interview earlier with Reuters, citing some macroeconomic weakness in some emerging markets. Now, in China, there's obviously concern that the trade tensions could be leading to a dampening consumer sentiment. Are we seeing that at all in the numbers? Is there concern about this?
Yeah, so stepping aside from the numbers just a little bit, I think, when you look at Apple and who their target audience is, which does tend to be more affluent, even in markets like China and India, which are some of the larger markets, I think, even over the past 10, 15 years, luxury goods have continued to do well. And so I wouldn't expect to see as much of an impact there, because it's simply, when you're targeting an audience as affluent as those are, it doesn't tend to have as much of an impact.
Right. Just want to point out Cook just now on the call citing about how strong the year was. 2 billion iOS devices shipped, best September quarter ever, 10th anniversary of the App Store. Overall, the quarter actually had the biggest quarterly growth spurt since 2015. Horace, I want to talk about the 10R. There seems to be a lot of investor sentiment around this. Why all the excitement when it could be potentially cannibalizing its more expensive products?
Well, the 10R is actually still a $750 minimum price. I mean, it's a significant rise over the $600 to $700 price points we've seen in the past for the leading products. So now we're seeing a sort of an uplift in the overall ASP. The product is also not necessarily cannibalizing. I think it's actually very interestingly positioned as a middle product in terms of screen size, which is what most people respond to when they look at the initial impression. It is a very solid product, and that's what surprises me a little bit. Now, I'm saying there's a little disappointment, but let's not forget we're talking about projecting here about 77 to 78 million units sold at an average of $800. So this is going to be still a great quarter. It's just not the sort of growth that we just saw, 20% plus in the top line. We're seeing almost a flat top line going forward here. Again, I'm actually penciling in a little bit of growth on the iPad, a little bit of growth on the Mac as well, single digits, low single digits. But it's not really, the big growth are services and other, which are in the 30 to 20% range, which are doing rather well and will continue to do well. But those are based off of an install base, which is over 1 billion devices, actually 1.3 billion devices out there, and that is where the services growth is coming from. It's just that I think there's a question whether 10R was going to be a home run or not.
Julie, what's your take on that? Is the 10R excitement justified? Will people upgrade for this cheaper-ish phone?
Yeah, and I think you see still a lot of consumers in the market. They still may have a 6 or a 7 or an 8 that have been waiting to upgrade to something that's more affordable to them. And I think that, that's some of the target market we see them chasing.
And I just want to point out, Tim Cook talking about the new iPhones being the most advanced ever. They have 7-nanometer chips and are ahead of the competition in technology. And he's quoting reviews on just how good some folks think they are. Horace, you were talking about services earlier. They actually came in under expectations. What's your take on that? Is services not growing as much as expected?
Well, it's doing pretty well, actually. My expectations were in line with what we saw, and we saw about 10 billion quarter. They're certainly ahead of schedule in terms of hitting their long-term targets, sort of $50 billion a year run rate, and that's going to be reached probably next year and ahead of schedule. And that's not a bad story at all. There were some one-off charge or revenues that were not present this year, but overall, I don't think there's anything I can see negative about services right now. I think forecast now I'm looking at about 18% growth, a little bit less than we saw in the past.
That was a Simco analyst Horace Dedew and Forrester analyst Julie Ask. This week, we saw more unrest at Snap. The company has lost its vice president of U.S. sales, Kristen O'Hara, after she was promoted to chief business officer. But then CEO Evan Spiegel changed his mind. Sources tell Bloomberg that Spiegel went as far as notifying O'Hara's direct reports of the promotion, but 2 days later rescinded the offer, instead hiring Jeremy Gorman, who used to oversee ad sales at Amazon. Now O'Hara is the latest executive to leave the social media platform, telling colleagues in a statement on Monday that she's leaving due to changes in team structure. And coming up, Facebook's user growth is its slowest since at least 2011, and revenue growth rates decline. We'll dive into the third quarter results. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. The other big tech earnings of the week, Facebook. The social network reported revenue that missed Wall Street expectations on Tuesday, a sign that privacy scandals, data breaches, and other problems continue to take a toll on the company. Yet Mark Zuckerberg still seems confident in the press release, stating, quote, "Our community and business continue to grow quickly, and now more than 2 billion people use at least one of our services every day." We're building the best services for private messaging and stories, and there are huge opportunities ahead in video and commerce as well. Now, we dug into the earnings report with Deborah Aho Williamson of eMarketer and Techonomy CEO and Bloomberg contributor David Kirkpatrick.
I think it was pretty much what they predicted, which is reassuring in a sense. I think the question is it enough? But that's a different question entirely. Clearly, they're still capable of being an extraordinarily profitable company. But I think we have to really ask, will enthusiasm for using Facebook and its other properties continue to grow in developed countries like the United States and Europe?
And Deborah, we've got a pretty mixed bag of numbers here. Revenue missed Wall Street expectations, but as David mentioned, profits were better than expected. Can you break down the numbers for us? What were some key highlights?
Yeah, for me, I think although the revenue was a miss, it wasn't a large miss. So that it was, I guess, a partial good sign. I think that also we saw a return to a slight amount of growth in monthly active users in the important US and Canada market. We saw flatness in daily active users, which is a bit more concerning, but at least on the monthly basis, we saw growth there. On the other hand, there was some declines in the European monthly active users, again, probably due to GDPR fallout. So again, like you mentioned, it's a mixed bag. I think it's about as good as you might have expected for a company that's been into a lot of turmoil this year.
Right, you were just talking about the user growth. It was pretty flat for daily active user growth. For North America monthly active user growth, there was actually a slight uptick in growth. What's the significance of this? Is this reassuring to investors that things at least are not shrinking?
Well, at least on a monthly basis, they're not shrinking. And I think that is important. And also on a global basis, it's important to point out that Facebook has been able to maintain that solid 66% ratio of daily active users to monthly active users, something that they've had over the past several quarters. So again, they managed to eke that out very, quarter after quarter. If that number starts to decline, I think that's a bigger red flag. But overall, again, I think this is about as good a quarter as you could expect for a company in the position Facebook's in.
Right, and I just want to point out, as we're going live, Mark Zuckerberg has just started speaking on the call saying we have had a solid quarter, but I want to point out that costs are rising. They're up 90% from the same quarter last year. David, what does this mean? Are they spending still on the content management issues? Is this where this 90% increase is mostly coming from?
I'm sure that's the reason it's going up so much faster than it ever has before. I think the company wants to say, simply by spending and hiring, that they understand how serious the problems are and they're doing something about it. But the proof is in the pudding, as we say, and until we see Facebook not having the pernicious effect that it's having on elections and on social dialogue, which is still manifest in all kinds of ways in our country, in the United States, in Brazil, and around the world, I don't think we're going to really be confident that those measures are enough. Nonetheless, it's good they're willing to spend money on it. I fault them, though, for not being willing to talk about it bluntly. And maybe on this call, Zuckerberg will be pressed to explain how he feels and how he thinks about the extremely negative role that Facebook has played in certain aspects of modern society, which they have never directly confronted. But I'm glad to see them spending money.
And Deborah, I'm sure we'll hear more about this on the call, but as David mentioned, there are these societal concerns that are hanging over their heads despite some positive numbers. Are you seeing brand advertisers holding back at all because of the brand safety, security issues we've been talking about?
Yeah, you know what? We have not seen any holding back on major advertisers. They're continuing to spend strongly on Facebook. They're spending strongly on Instagram as well. We're forecasting Instagram will have $9 billion in ad revenue this year, amounting to about 25% of Facebook's overall ad revenue in the United States. So an important and growing part, and advertisers are still very enamored with Facebook and also with Instagram.
That was Deborah Aho Williamson of eMarketer and Techonomy CEO David Kirkpatrick. Still ahead, IBM CEO Ginni Rometty is staking her legacy on a risky $33 billion Red Hat deal. We kicked off the week hearing from the two CEOs, and that's next. And later this hour, Brazil's hard pivot to the right. Former Army Captain Jair Bolsonaro's commanding victory on the back of a social media store. We'll look at the role technology played in the poll. This is Bloomberg. The PlayStation 4 is like the video game character that can't be defeated. 5 years after its debut, Sony's $300 console is enjoying one of the strongest product cycles seen in the business. This isn't thanks to a steady stream of popular game titles, which has helped the Tokyo-based company ship twice as many PS4s as Microsoft's Xbox One. That puts Sony's franchise in a strong position to counter the $34 billion console industry's next challenge, games delivered via the web. After years of predictions that cloud-based gaming would make hardware obsolete, the technology finally appears close to being ready. IBM has thrown its hat into the cloud computing ring. On Monday, the company announced it's buying open source software pioneer Red Hat for $33 billion in one of the biggest technology deals ever. The CEOs of both IBM and Red Hat spoke with Bloomberg after the announcement.
We've been working with IBM for many, many, many years, and really over the course of this entire year, we've started to do more together. We made some big announcements at May at our summit, more work that we're doing together. Ginny and I really started speaking more seriously back in April, and so it's been something that's just kind of continued to evolve, and it just became a natural next step. In terms of why we see so much value for Red Hat is we do see tremendous opportunity for open source in the enterprise, and as the leader there, we see just a large market and a growing market in front of us. What we have lacked is scale in our go-to-market. We've lacked the depth of customer relationships because, again, we're a newer player kind of coming up. We've lacked deep industry vertical expertise, and we lack just the overall level of investment we need to meet our full potential. IBM brings all of that. So together, we can dramatically accelerate the Red Hat business and what we do today, and then together be able to offer unique offerings that can continue to grow IBM's business as well.
So Ginny, what about from your point of view, from the point of view not just of IBM, but of Ginny Rometty, because a lot of people said IBM needs to make a move. This is a big move. This is going to be, if not your biggest move, one of your biggest moves during your tenure as CEO. Why did you decide this is going to be your legacy, or at least an important part of your legacy?
Well, we've been reshaping IBM for this moment, and this is, to me, all about resetting the entire cloud landscape, and this is the inflection point to do it. Because if you look at our clients, chapter one of the cloud's over. They've moved the easy 20%, the cost saving that they wanted to get done. That's done, but the 80% ahead, that is a $1 trillion market, and this is the moment, and to go after it, they need a hybrid cloud. They need what Jim and I do together. They need hybrid, meaning on-prem, a private cloud, many public clouds. They need it based on open standards. They tell us they're tired of the lock-in. The other clouds are often a lock-in. We are the true open source, the portable answer for them. And we need to manage multiple clouds, and they also have data now spread everywhere that we can securely pull all together. So this next chapter is a $1 trillion market. 80% of their workloads are going to move. Jim just talked about our industry expertise, our services, our ability to do that, and we're going to give them that answer. So we catapult ourselves into number one. And you have to remember, Jim, Linux, IBM, open source, we together are the biggest contributor to the open source community. We have a long history and legacy of that. And Linux is the starting point for the cloud, and it's a destination. So when I say phase two, we own the starting point and the end point now. That is a great move for IBM, and it's why it's so really accelerating all of IBM and good for our high-value model.
IBM Chairman and CEO Ginny Rometty and Red Hat CEO James Whitehurst speaking earlier with Daybreak Americas. Now, let's take a deeper dive into the deal now with Daniel Ives, Managing Director of Equity Research at Wedbush Securities, and Bloomberg Intelligence Senior Software Analyst Anurag Rana. And Anurag, I want to start with you. I mean, you remember the days when I covered this company back in 2013 to 2015. She's saying now is the inflection point to cloud. Some folks might argue that inflection point already happened. What do you take of her finally kind of making this admission that they can't build it in-house and they got to buy it?
I think they should have done an acquisition like this a long time ago when you and I were talking in those days. Now, they didn't do that. They were hanging their hat on Watson. That hasn't really done much for their cloud business, I think. But, this thing in principle can really reshape a lot of the things that they do. It can reshape their software practice, and it can also reshape their global business services practice where, they have lagged companies like Accenture and Deloitte and Capgemini in terms of growth rates.
And that global business services practice is still a majority of revenue, Dan. When you think about how this business does get integrated, Ginny made her name on that services side, integrating PwC Consulting back in the day. How much pressure is on her to actually have a seamless integration with Red Hat into the broader culture and product fit for IBM?
Hey, look, there's a lot of heat in the kitchen for them to integrate this successfully, and definitely it comes with risks, but obviously opportunities, as he talked about. Because right now for cloud, they needed to make a big strategic bet. If you look at it, there's VMware, Red Hat, a handful of others, but if they were going to do it, they need to do it now. Definitely a few years too late, but the integration is going to be the key for the street. And also looking at competitively, how does this affect Microsoft, Amazon, a two-horse race in cloud? Can IBM become that number 3 player? That's sort of the key here. So
who is shaking most in their boots right now, seeing this acquisition? Is it Amazon? Is it the number 1 leader? Who is most fearful of a combo of IBM and Red Hat?
Yeah, Amazon and Microsoft continue. They're drinking cappuccinos right now. It continues to be their world, and everyone else is paying rent in terms of cloud. But I think fundamentally speaking, it's the smaller players. I think you're seeing a lot of consolidation. Cloudera, Hornetworks. I think that's just the start. We're going to see a lot more M&A in cloud, and there's just the tip of the iceberg. A lot of smaller players, as you know well, the scale, that's really going to be the issue with these two players coming together.
And that did seem to be what those two executives did talk about. Red Hat has the growth, but the small size. IBM has the scale, but as we know, revenue's fallen by about a quarter since Ginny took over in 2012. Do investors now look at IBM as a growth story? They're reining in buybacks. They're not giving out as much cash. Does this change the narrative for them?
Once again, we talked about it about 6-7 years ago that they shouldn't be doing financial lending. You should be buying more companies like this. This does give them a lot of good products to sell to the market. I think the one that we think can actually happen is it could benefit somebody like an Amazon or Microsoft or Google because you could shift more workloads to the cloud. And the question for me is really, are they going to be really open in terms of working with these Red Hat products to move some of that products to other clouds and not just go out and say, hey, why don't you move this to IBM's cloud? I think that really is a big thing because if they're not open, I think that could be an issue.
Well, because Red Hat's already working with Amazon. Yeah. They're working with Microsoft's Azure. I guess, is that a cultural shift for IBM to say, look, our products have to be kind of cloud agnostic? Do they have to kind of change their DNA to make that work?
They have to. There is no way out of it. We have seen with Microsoft. That is the only way to show people that you are agnostic to whoever the end party is and you're going to work with everybody else. You try to stick in your own technology in between, I think they will be in for a surprise.
That was Dan Ives, Wedbush Securities Managing Director for Equity Research, and Bloomberg Intelligence, Arunag Rana, speaking with Bloomberg's Alex Brinka. Coming up, we hear from Salesforce co-CEO Mark Benioff about San Francisco's homeless problem and why he's supporting Proposition C. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Welcome back to the Best of Bloomberg Technology. I'm Selena Wang in for Emily Chang. It's just days until the midterms, and here in San Francisco, there's another issue on the ballot. On November 6th, voters will decide whether to boost funding for homeless services through a special tax. It would only apply to companies with annual revenue of more than $50 million. Proposition C would generate up to $300 million in additional tax revenue per year, earmarked specifically for tackling homelessness. But the proposal has split opinion among some of the city's biggest tech names. Emily Chang sat down with the supporter of Proposition C, Salesforce co-CEO Mark Benioff.
We have a very serious homeless crisis in San Francisco, and it is getting much, much worse. We have 7,500 homeless individuals currently on the streets. We have 1,200 homeless families, each with 2 kids. And how are we going to get them off the streets? It's getting worse. It's a problem. We know it. That's why I'm voting for Prop C.
What about the unfairness that other companies are citing here? You have Jack Dorsey saying, I admit that while I come at this as a citizen first, there's an unfairness I see in my role as CEO of Square. This doesn't apply to Twitter. Companies like Square and Stripe would be taxed at a significantly larger total contribution than much larger companies like Salesforce. Do you see the unfairness?
Well, what I see is a crisis of inequality in San Francisco. I mean, that is what is striking to me. We have 70 billionaires here in our city. That's incredible. We have companies that you report on with hundreds of billions of dollars of market cap. Of course, you know Salesforce, we're the largest employer here in San Francisco, not just largest tech employer, largest employer. We have a $100 billion market cap. And you just talked about a few companies, Square worth 30 billion, Twitter worth 20 billion, Stripe, 20 billion. Well, the amazing thing is these companies can afford it. For us, it's just a $10 million tax. These are immaterial amounts to us. $10 million doesn't mean anything. That's less than the private plane that Jack Dorsey is going to fly around on. You know that. And I'll tell you right now, it's the money that we need to make a difference here in San Francisco.
Well, Jack Dorsey is saying that at a certain point for Square, it becomes unsustainable and that they won't necessarily be able to stay in the city, which, in his words, would be heartbreaking. What do you say to that?
Well, that's what I see with the homeless. I see that the homeless aren't, getting the treatment they need, and that is they need shelter, they need mental health treatment, they need treatments for their addictions. And kids who are on the street, I mean, that's the most touching part. These kids, they've got to get into homes. And we have the plan. We know how to do it. We've been running very successful programs here in San Francisco for the homeless now for years. You know that. I've been involved with them. I've funded personally tens of millions of dollars for homeless programs. And what I found is that we know how to do it, but we need more funding now. I was just on the phone with the mayor. She needs an emergency funding of $6 million from me to get a shelter open in the Tenderloin. That's because she's out of money. And if you look at other politicos who are supporting this, well, Nancy Pelosi is supporting this. Senator Dianne Feinstein is supporting this. Jackie Speier is supporting this. And not just me, Chuck Robbins, who's the CEO of Cisco Systems, and Cisco Systems, we're also supporting it. So you have basically the nation's 2 largest tech employers right here. It's $250 billion of market cap between Salesforce and Cisco. We're both supporting Prop C. We think this is right for business because homelessness has been so tough on our business.
Mayor London Breed has made homelessness one of her big issues, and she is not supporting this. She thinks that there needs to be a regional, a more structured solution. Shouldn't she have a say in what happens in her city?
Well, of course, all of this got created way before London Breed became our mayor. And this is put together by our city's very top homeless advocates. In fact, the people who are on her staff and her team have been involved in putting it together. Our top homeless NGOs are putting it together. And really, even the experts at UCSF who have worked with other cities like Salt Lake City and our national vet programs that have gotten them off the streets have put it together. So I have a lot of confidence in the program, and I think this is the right thing for our city. And look, big business pays. Consumers don't pay on this. It's just our top 50 businesses, in San Francisco that are going to have to pay a very small tax, but to deal with our #1 issue, and that's why I'm supporting Proposition C.
I know you've tried to raise money for this privately as well. You've tried to raise money for many issues privately. How much of this comes from your frustration that other tech leaders you feel aren't doing their part?
Well, thank you for opening that door. I mean, we are constantly raising money here in San Francisco. You know that because you helped me out quite a bit. So thank you for everything that you are doing and everything that Mike Bloomberg is doing. Mike Bloomberg is probably one of the most generous people in the whole country. He's given over $6 billion of his fortune away. Incredible. Well, here in San Francisco, we have our own philanthropic needs. When we had our North Bay fires a year ago, we raised $40 million. The people who are complaining about this, they didn't give us money for that. Of course, we just raised $40 million to get every child off the streets in San Francisco, and we have now got hundreds of families off the streets in San Francisco with this program. They didn't give us any money for that. And of course, we had our SF Gives programs with Tipping Point, where we raised tens of millions of dollars to help those most in need in San Francisco. So the only thing that these guys are giving money to is the opposition to this proposition. That's the first time they've ever given any money to anything in San Francisco. Well, I guess it's good that they're giving.
The country can't seem to catch its breath ahead of the midterm elections. You've got the pipe bombs, the visceral debate on social media, shootings. What do you think can be done? I mean, would you like to see Twitter go back to real names?
What I'd really like people to do is to just open their hearts and be able to look at when they're walking down the streets and you see homeless adults and children on the street, say, there through the grace of God go I. You know, one of the things that I love about San Francisco, we're built on the patron saint is St. Francis. And he had a great phrase. He said, in giving it is received, that we receive. And in giving that we receive, well, that's how I look at Proposition C. You know, the C in my mind is for compassion. The C is for charity. This is the very heart of what we do in the city. And I think if you want to really make the world better, then it's time to start giving. And that's the best way to let people know that we're caring about them.
You've taken a hard line on some other companies like Facebook, and in the past you've said that's caused you some troubles in your own friendships. And I wonder, has this done the same?
Well, of course, you know.
How are your relationships being affected by this?
Emily, well, hopefully our relationship is all right. But I mean, number one is, the most important thing is that I feel like I need to speak my truth, and sometimes that means speak truth to power. I've had a lot of tough phone calls from executives who get very unhappy when I say something like, you know, I said in January, Facebook is the new cigarettes. It's not good for you. It's addictive. It's being manipulated. Others are trying to get you to use it in ways you don't even understand. All of that has turned out to be true and much worse than even I ever imagined. And that's a tough conversation. And then this is a tough conversation too, where I said, business is the greatest platform for change. We can fix the homeless situation in San Francisco right now. All we have to do is vote for Proposition C, and it's immaterial to our business right now, the financial numbers, but homelessness is material to my business.
That was Salesforce co-CEO Mark Benioff speaking with Emily Chang. Still ahead, Jair Bolsonaro swept to power in Brazil's presidential election last Sunday. We discussed the role that social media played in his win and what other countries should take from it. Plus, tech companies recoil from Gab for its link to the Pittsburgh synagogue shooter. The debate over free speech is on the internet once again, and it's front and center. That's next. This is Bloomberg. Bolsonaro swept to power in Brazil's presidential election last Sunday, marking a hard pivot to the right. Bolsonaro, a former army captain, campaigned on a right-wing platform of privatizations, liberal gun laws, and security. And the win promises to strengthen Brazil's ties to the United States. Bolsonaro's rise to power is notable in that, much like President Trump, it benefited greatly from social media. WhatsApp is also one of the main tools that Brazilians use to keep in touch with friends and family, and increasingly to do business. And it's also a part of politics. The app helped to spread alarming amounts of misinformation, rumors, and false news. Alex Brinca spoke with Chris Tardaguila via Skype, director of Agência Lupa, a fact-checking platform from Rio de Janeiro. Chris recently co-authored a report on misinformation in Brazil, and it's about WhatsApp's role in it. Bloomberg reporter David Biller also joined us from the Rio Bureau.
What we see, it is a big amount of misinformation going back and forth on the WhatsApp system. We have analyzed about 50 images, for example, and out of those 50 images that we got actually to analyze, we only found that 4 of them were totally true. That is like very little amount of good information being around in the WhatsApp in Brazil. That's a very low amount of good information.
4 out of 50. 4 out of 50. That is very low. When it comes to where we've been concerned about disinformation, a lot of focus has been put on Facebook and Twitter, but it seems like these kind of more private conversation is where it's at. Chris, how concerning is this that these are kind of happening a little bit more out of the public eye, perhaps in group text, but not on a public message board like Facebook or Twitter?
Right. What we have noticed here in Brazil, we have just finished the election, is that we have spent about 2 years analyzing and trying to figure out how to fight misinformation on Facebook, on Twitter, and Google, like the social media that we usually read and reach, right, every day. And now we have this whole new world being opened up. That is that how do we fight misinformation on encrypted platforms such as WhatsApp and Telegram? That is something that we in Brazil didn't figure out very much, and somebody else in some other part of the world might need to figure out.
And David, put this in context for us in terms of this election. I mean, Bolsonaro was not necessarily right in front of the public eye before this candidate cycle. How much did this kind of groundswell of social media actually kind of change his ascent to power?
Well, it's tough to know for sure, right? Because WhatsApp, and I know it's not so popular in the U.S., but it's encrypted from end to end, and so you don't really know what the impact is. He is someone who built a very big social media following, both on Facebook and on Twitter, and then a lot of this stuff, goes through WhatsApp, but you really don't know how much. And certainly there was much more concern about the use of WhatsApp and how it influenced the election in the first round. You could probably speak, or Chris could probably speak better to that, but it seems as though it kind of came down a bit in the second round after the courts began reacting to this. There was a big bombshell report saying that a company or companies were financing mass WhatsApp messaging to people, to the Brazilian electorate. And that really had a big impact on the first round, but we don't know how much. We won't know how much, it doesn't seem.
What we do know is that tough talking does make for viral content, David. In terms of what he is kind of pushing out there in terms of the messaging, how much is it tough talk, and how much is there actually policy behind some of the ideas around security, gun laws, and privatization that he's been really pushing?
Well, I would say that's an issue not just regarding Bolsonaro, but a lot of the candidates in this race entirely. It wasn't about policy proposals. This wasn't a race where everyone was out there saying, I'm going to do X, Y, and Z, and he was the only one, with bluster. It was a lot of that on all sides. I think that he's made clear where he stands in terms of traditional family values and liberalizing gun ownership, policies like that. Others say he's always been fixated on the idea of leveraging Brazil's economic growth by mining in the Amazon. That's something that you really didn't see much of during this campaign, but is nevertheless one of his big policy focuses, as well as privatizations you guys mentioned a bit earlier. Mm-hmm. That's something that we didn't see as much in the race, but is a cornerstone of the economic model they're going forward with.
That was Chris Tartaguila of Agencia Lupa and Bloomberg's David Biller. Meantime, Gab.com is now under scrutiny here in the U.S. Gab is a 2-year-old social network that bills itself as a free speech alternative to other social platforms. Here in the U.S., it's become a haven for white nationalists, neo-Nazis, and other extremists, and has now been linked to the accused Pittsburgh synagogue shooter. Robert Bowers has been charged with federal hate crimes, including the murder of 11 people. But before he allegedly barged into the synagogue last weekend, he posted one last anti-Semitic message on Gab. Since then, Gab has gone offline after web hosting company GoDaddy and other tech companies withdrew their services. But the Gab homepage has posted a statement, part of which states, "We are the most censored, smeared, and no-platformed startup in history, which means we are a threat to the media and to Silicon Valley oligarchy. Gab isn't going anywhere." Alex Branca brought in our panel to discuss on Monday. Bloomberg technology reporter Josh Brustein, along with Bloomberg contributor David Kirkpatrick, founder of Techonomy and the author of The Facebook Effect.
There's no question that we've seen sort of the most hateful dialogue moving to these more specialized platforms. And as your previous guests were saying, WhatsApp, Facebook Messenger, Telegram, these are all new platforms for political distortion. There's no easy answer to what we do. I think we need Facebook and Twitter and YouTube and other major sites to continue their efforts to essentially ensure that hate speech is kept off, particularly threats of violence. One of the things I really worry about is a site like Gab, which has no resources, which is very small, which primarily attracts people with very fringe views. It doesn't even have the financial capability to really do the moderation if they were to, for example, say, you cannot make threats of violence here. They clearly haven't been doing that. So that's why this got through.
And I can't help but ask myself if this is what Gab would be like if there was no, what Facebook would be like if there was no moderation. They would look like a Gab. I mean, Josh, Facebook has dragged its feet on calling itself a media company. They've been slow to get into the content moderation game. Is this kind of fuel for them to take a closer look at what exactly is going on the site and put the resources that a lot of folks have been calling for to kind of keep an eye on things?
Yeah, I think all of the larger social media platforms are really trying to say the right things about this. Over the last year or two, they've kind of increasingly owned up to it, at least rhetorically, and said, we're going to try what we're doing. We're going to try to do something different. They're not quite sure what to do, and so that's why you're seeing it be difficult. Meanwhile, with Gab, what you're seeing is a lot of how these companies talked, before they realized they were important, saying, hey, people are going to say what they're going to say, and we're just a conduit.
And I mean, the idea of being a haven for free speech it seems like kind of a noble statement here from Gab. How are folks like out in the world, users who are reading, supposed to parse through what is real and what is not?
Yeah, I think with Gab in particular, it's worthwhile to point out that they have two sort of conflicting messages that they will make. The first is it will say, we're a free speech platform. How can you possibly be against that? And at the same time, their CEO, Andrew Torba, is sort of very familiar with the sort of standard angry right-wing rhetoric. He's very comfortable in those worlds. And so he'll say he'll sort of say those things while also giving him distance from those things and saying, well, you can put anything you want on Gab, so you can't really hold me accountable.
That was Techonomy's David Kirkpatrick and Bloomberg Technology's Josh Brustein. Still ahead, Europe wants in on the crowded cloud space, how SAP is taking on U.S. competitors like Salesforce and Oracle. Up next, this is Bloomberg. Bloomberg has learned that India's second biggest wireless carrier, Bharti Airtel, is delaying a planned initial public offering in its Africa unit due to the turmoil in emerging market stocks. The company, backed by billionaire Sunil Mittal, was originally aiming to list the unit in London by March, but it's now pushed back the share sale by about half a year. It plans to seek an enterprise value of about $8 billion for the Africa business, and that's according to people familiar with the matter. While U.S. tech giants like Amazon and Microsoft jostle for market share in the cloud, Europe's largest tech company is gaining speed. Well known for its enterprise software for managing business and customer relations, SAP is now pivoting its strategy towards its cloud suite. The tech giant saw new cloud bookings rise 37% in the third quarter and said that it now generates more revenue from that business than from on-premise products. And now it hopes to take on Salesforce and Oracle, raising its cloud subscription revenue forecast for the current quarter to $6 billion. I sat down with CEO Bill McDermott on Thursday to discuss.
You have a major move to the cloud, so if legacy companies haven't fully vested themselves in the cloud, where they've converted their revenue streams more to cloud than on-premise, I think you'll see them make bold moves to get cloud ready. So no choice. That's where the customer wants us.
So now Oracle recently launched this autonomous database that doesn't need human administrators to function. I mean, do you see a lot of competition from this? Are you developing something similar?
Yeah, we obviously have taken over the enterprise database market with HANA. So HANA has many of the characteristics that you mentioned, but moreover, HANA can take data from any source. So everything that is either structured or unstructured and data from any source in the enterprise. HANA is running the biggest enterprises in the world now with more than 25,000 customers at mass scale. So we like our HANA database very much.
Now, sticking with competition, I want to talk about Salesforce. What is the plan to catch up with them in the customer relationship management cloud market?
We see a fourth generation of CRM where we go beyond the current market participants. Basically, they focus on sales, marketing campaigns, things that essentially take money out of the customer's pocket. What we want to do is focus on an omni-channel e-commerce world where we connect the demand chain, because that customer's social, they're mobile, they're on the run. They shop in every channel, direct to consumer, wholesale, retail. And we want to connect that demand chain to the supply chain so you have a complete end-to-end business. Why is this so important? Because we're not just talking about CRM. We're talking about customer experience, the way CEOs think about their brand, their products, their human capital, their customers. All of the people inside a company have to be completely committed to the customers outside the company. This is what we call fourth generation CRM. It's all about the customer experience.
Now, you've met with President Trump before. Wall Street was very quick to cite the tax reforms as a way of future profit growth, but now the focus has really changed to his decision around tariffs. I mean, what's your assessment of his performance, and what are you hearing from clients and partners around this?
Well, the most important thing is we get paid to run businesses and work in an environment where we let government do what government does. And all government leaders have to do what's best for their country and best for their constituents. And these tariffs are obviously a serious situation. You have the two largest economies in the world, 30 trillion in combined economic firepower, right now a little bit at odds with each other. So it's good, and you saw today's tweet when it was like stated that at the G20, President Xi and President Trump will sit down and talk. That's very encouraging to the markets. Markets like certainty. So certainly we'd like to see China and the U.S. cooperate. It's good for supply chains, it's good for business.
And China is a very important market to SAP. You've been there for a long time. I mean,
yes.
How are the current tensions impacting business? It's a German company, so is it good for business in a way?
Well, in a certain sense, you could say that. German engineering is highly regarded in China, as it is in the United States and around the world, but we do particularly well in China. And China is our fastest growing market, and we think that China is easily regarded as SAP's second home in terms of the market receptivity, the ecosystem growth in China, and our long-term prospects. We think China will end up being the biggest market in the world soon.
What is your approach to servicing customers there, given the data privacy concerns?
Well, we have, as you know, or probably do know, the most sophisticated data privacy technology in the world. We acquired a company called Gigia, where we have billions and billions of customer records. So we protect your privacy. We don't let customers actually engage you unless you agree that you want to opt in on various offerings from our customers and how they serve their customers. So we follow the same reference architecture, high security standards, and cloud standards in China that we do in Europe as well as the United States and every other theater in the world. We are very confident in China and the way enterprises can serve their customers in China with high security standards. We recently announced a very important partnership with Alibaba, and that is a cloud partnership that will not only impact our growth in China, but also the ASEAN region, which is one of the fastest growing regions in the world.
That was SAP CEO Bill McDermott. And that does it for this edition of Best of Bloomberg Technology. We'll bring you all the latest in tech throughout the week. Tune in each day at 5 p.m. New York and 2 p.m. San Francisco. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.